Thank you, Carl and Sarah. Welcome to the Halftime Report. I am Frank Holland in for the Judge Scott Wapner. Front and center at this hour, rethinking the AI trade following those blockbuster results from Oracle. The investment committee standing by without their playing this monster move. Joining me for the hour, we have Joe Terranova, Jason Snipe, and Jim Lebenthal. But first, quick check on the markets right now. The S&P and the NASDAQ both hitting fresh record highs. Right now, you're looking at the S&P up just under 0.5%. The NASDAQ up just over 1/3%. The outlier here, that's the Dow, pulling back nearly 0.5%. Also this morning, we're waiting, or this afternoon, I should say, we're waiting the first trades for Klarna. That stock pricing at $40 a share. It's now indicated to open between $52 and $54 a share. We're going to bring you those first trades as soon as they cross. Our Leslie Picker is standing by. But let's start with our chart of the day. Now look at this chart, guys. Oracle just amazing. The stock soaring to a new record high as the company offers bullish outlook on strong AI demand. Shares up over 41%. Everyone here at Post 9, you own the stock. Joe Terranova, I'm going to start off with you. Is there anything in this report to nitpick at? Or is this just a blockbuster report that moves the markets higher, that moves the AI trade higher, that gives a boost to software, hardware, energy? Is it just that, or is there something else here?
Well, it's a great question to ask because I think the natural reaction and natural response to seeing an individual stock up 41% is to automatically think you could take the other side, that you're going to get some form of mean reversion. You began the show by saying rethinking the AI trade. I think that's actually a real challenge if you're going to do. There's nothing to rethink here. This is very clear. This is actually, you should not be outthinking yourself. The AI trade has been the dominant trade for the last several years. It is literally the catalyst that has saved markets in the last 2 years when we were coming out of a very punishing interest rate hiking cycle from the Federal Reserve. So I don't think by any measure here you try to overanalyze what this is and get in front of it. You do not short it. You understand that if you have been there, and in the case of Oracle, in July of 2024, we added it to the ETF at $139. Why did we do that? We did that because we knew the quality factor was strong, but we saw the momentum factor begin to build alongside that. This company right now, and the street is expecting, that their cloud infrastructure growth over the next 5 years goes from 10 billion to 140 billion, okay? So there's nothing there really to overthink and to get in front of. If at some point this momentum reverses itself in the artificial intelligence and generative AI trade, that'll be well known to all of us within the marketplace. But I think the most simple thing to do right now is to understand how dominant this force is in the marketplace. And you can do one of two things: participate or sit on the sidelines and wait for the inflection point. And this report says it's not coming anytime soon.
I mean, we're looking at a right angle on the chart. How often do you see that, Joe Terranova?
It's a parabolic move. Parabolic moves are very tempting. Parabolic moves can sometimes be scary, but parabolic moves most of the time means if you're not participating, take a step back and observe for a little bit.
All right. Some people are doing a little bit of thinking about this. The analyst in this case, B of A, raising their price target on Oracle from $295 up to $368, Citi from $310 up to $410, UBS from $280 to $360, et cetera, et cetera, et cetera. We keep going here. Jason Snipe, same question to you. Is there anything to really think about, or is this time to put more money back in tech, more money into this AI trade, and also those second derivative plays, energy, infrastructure, et cetera?
Yeah, no, I mean, I can't remember the last quarter I saw like this, right? You know, RPO, $455 billion, up 359% year over year. You know, it was a miss on the top and the bottom, but it's obviously all been about the guide. You know, for me, the glaring theme for me is capacity constraints. They added $4 billion multi-year contracts this quarter from 3 different companies, obviously suspecting OpenAI is one of them. But this is overflow from Microsoft, Google, and Amazon. So to Joe's point, I think this theme is alive and well. It has been for some time. We've seen other numbers from different companies, whether it's AI adjacent or AI direct. You know, obviously we saw a quarter from Marvell last week that wasn't so hot. We saw from Broadcom that was really strong. NVIDIA, there were some blemishes there on the data center revenue, but this quarter was really strong. The theme, I think, again, is very much intact, and I think it is, again, it's not indiscriminate buying, it's being selective here, but these are obviously one of the winners.
You hit some metrics we're going to touch on in just a second, but first, I want to go to the paragon of patience, Jim Lebenthal. He's been waiting. He has been waiting. Jim, I know you want to take a bit of a victory lap. You bought this stock a couple multiples ago. Just give us your narrative on Oracle, how you feel about how it's trading now, and tell the audience where you bought this stock at.
Yeah, I bought this 2.5 years ago at $86 a share. Sorry to one-up you, my friend, but all three of us have gotten in at great prices. And I actually, instead of just pounding my chest, which is a little obnoxious, and I apologize for that, I want to draw a conclusion from that, because I agree with Joe and Jason about the full-throated defense of AI and this stock in particular. I don't think you're going to get a pullback anytime soon in Oracle. But think about what was going on with Oracle in 2023. It was a time frame where it was kind of burbling along while NVIDIA was going from $20 a share to $150 a share, split adjusted in that time frame. And the point that I'm making here is with regards to the AI trade, and not trying to overanalyze it, but not all of these stocks are going to move at the same time. Clearly, right now, this is Oracle and this is Broadcom's time, right? They are moving hard. I'm taking nothing away from NVIDIA, which I own. But what I am saying to you is it is okay to start thinking about what might look like Oracle did 2.5 years ago. I'm going out on a limb here, and I've said it before.
Anything look like that, Jimmy?
Well, I'm glad you asked, Joe. I'm going to give you my answer. You don't have to agree with it. I do think Cisco Systems looks like Oracle 2, maybe 3 years ago, because now you've got Oracle at a multiple as of yesterday of 50 times, but it's growing into that, right? As the estimates are going to go up, that multiple's actually going to go down. I'm starting to see Cisco do the same thing, and frankly, Cisco's multiple, Joe, to answer your question, is kind of exactly where Oracle was 3 years ago. Now, I know you know me, Jason knows me. We get a little sardonic smile on your face. Maybe we're going to mix it up here. It's all good. It's all good. You can't have that opportunity without people saying, get out of here, you're crazy, it's Cisco. Just think about it. Cisco has a lot of the same drivers, i.e. AI, in a nascent phase that Oracle did 2-3 years ago.
Jimmy, you're putting a smile on my face because the ETF owns Cisco. We're there.
My man.
We're there. Today is about AI. It's about the halo. It's about utilities that are working well. Look, though, if you're sitting there and saying, well, how do you feel about the market today as it presses higher? This isn't a broad-based rally today. It's not. This is all about AI. Let's be clear.
True.
So there are some that will push back and say, well, what do I have to go on as a catalyst beyond AI and technology? And that is a fair point. That's a fair point, because today it's not really lifting the entirety of the market.
Yeah, by the way, Jim Lebenthal is saying, I don't want to toot my own horn, but beep. You know what I mean? Taking a little victory lap very quickly.
I apologize for it. It's a little gross.
You already hit on some of the second-level plays here. You're mentioning Cisco. You're looking at Broadcom. Those shares up about 9%. NVIDIA's up about 4%. Is this just really a sign that some of those second-level plays, second derivative, whichever way you want to talk about it, this is their time as well? Is this also a sign that Palantir, it's safe to put money back in there after this report? That stock's seen a lot of volatility. Is this also about a Vistra? You safe to put money there? Because if you're going to have this kind of data center build-out and this cloud infrastructure build-out, you need power as well. I mean, is that the way you guys all see it? Jim?
Yeah, I mean, look, Jason pointed out the remaining performance obligations, $455 billion for Oracle. Guess what? That money is going to flow through the supply chain. I don't care if it's utilities. I don't care if it's Cisco or Broadcom. That's a lot of money that's coming into the ecosystem, and it's going to hit a lot of pinball, a lot of pinball bounces before it gets to the bottom. So this is good for the AI trade writ large.
Sorry to cut you off, Jimmy. A lot to talk about here. I want to go back to RPO. Jason, you kind of hit on that. Nearly $500 billion in RPO. Right. Tremendous. They actually named a few of the companies they're getting it from in the public markets: Meta, NVIDIA, and AMD. Three of the names they named. They also named some private companies, including OpenAI and xAI. With that kind of money coming into this name, Joe, I'm going to come back over to you. where else do you want to go? Is it utilities? Is it industrials like a GE Vernova and an Eaton that help? I mean, where's the second play to get ahead of the curve? Because today, as I mentioned, Broadcom's up, AMD's up. Looking at Alphabet and Microsoft, they're actually up, but just very slightly. Looking at some other names like Vistra, last time I checked, up about 6%. Arista up about 6% as well. How do you get ahead of the curve? I think that's what people are trying to figure out.
Well, I think, first of all, your question infers that a lot of people might have sat out on the sidelines, and if they have, is this the moment to kind of re-engage? I don't know if I feel comfortable saying, yes, this is the moment where you want to re-engage. I said last week to Scott on the show that I felt the thematic investment philosophy of artificial intelligence, advancing the innovation towards generative AI, it might be maturing. And I use that word maturing as it relates to one critical aspect of that, and that's positioning. Look, we know about how powerful this technology is. We know about this innovation, and people have been allocating there now for multiple quarters for the better part of the last 2.5 years. So I think positioning is critically important at this point. Yes, it is going to be all the places that over the last several years, like utilities and some of the industrials, and you mentioned Palantir, which is up 2.6% today. But we know that. We've known that over the last several years. So I think you have to be very judicious in where you're going to engage if you haven't engaged yet. And this is a sobering statement. And quite candidly, if you haven't participated, you're kind of sitting on the sidelines for a party that's been going on for the better part of the last 2 years, and you might have just missed it.
Well, the party has been going on for the last 2 years, but in recent weeks, we've seen a lot of reports like from the BofA Flow Show, money coming out of tech. We've seen what we thought was a broadening, at least for a week or two there, where we saw the equal weight outperforming the market weighted.
I think that's tactical more than anything else. I don't think there's anything in front of us. And my remarks where I've said, if you sat out for the last 2 years, you might have missed it. That doesn't mean there's an inflection point in front of us. This can go on for far longer than any of us can possibly imagine. But when you're prudently understanding risk relative to reward, you have to factor that in and understand you've got dramatic price appreciation here, and I'm not so sure up in the stratosphere is where you want to re-engage.
I want to go back to something else that Jason Stipe mentioned, the database revenue up over 1,500%. I mean, it's just an unbelievable number. A lot of that business coming from Microsoft, Alphabet, and also Amazon. It's the business that they can't handle. They kind of, some people call it dumping, but they kind of send it over to Oracle. So is that a very bullish sign in all of your minds for those three names as well, those hyperscalers, the fact that they have so much capacity, they have to actually, for lack of a better way to say it, dump it on Oracle? And then on the flip side, is it a little bit concerning about how profitable that revenue really is? Because they are bringing it to them. It's kind of similar to the way that Amazon sends their packages to UPS and FedEx. They're dumping it on them at a very low margin. Is that at all a concern going forward? Jason?
Yeah, so, I mean, you mentioned Microsoft, and Microsoft has obviously been pulling back a little bit over the last few weeks. Now, you know, one of the things that I really like what they did recently with this deal with Nebius, this 5-year, $17 billion deal, which is really going to provide tremendous GPU infrastructure. So, you know, I look at companies that have a suite of products and services that could really benefit from obviously this AI theme that we've been talking about, you know, diversified product set, you know, and I think they're starting to monetize Copilot. And I look at how large these companies are as an example, with Microsoft being 24% EPS growth in the last quarter, 18% revenue growth, Azure up 39%. So, you know, I think as it relates to the entire theme, it goes back to the point earlier. It's not all or nothing here, but there are the players that I think will continue to grow. And I think some of the hyperscalers that have pulled back, like in Amazon or in Microsoft recently, there might be a window to add some exposure.
By the way, Joe gave me a side eye when I was like, could it be concerning about the profitability? I mean, you got to look. I got to pull at some strings here. We got to look at both sides.
I will say what could be concerning is there's this stealth force surrounding the AI trade, and that's OpenAI. It's very difficult to understand. We're trying to figure out what's the right valuation. Now we're somewhere north of $500 billion. Does this company eventually go public, close to $1 trillion? But really, underneath the surface, it's difficult to understand exactly what that income statement might ultimately look like. And on the other side of that, the positive element is this powerful force is obviously driving a lot of the growth that we're seeing in the publicly traded AI-facing names.
Yeah. Also, that report today that Microsoft's going to buy AI from Anthropic, and a bit of a shift away from OpenAI,
diversifying,
raising some other questions about OpenAI, because we really thought those two, they kind of had a marriage that was going to be a big tailwind for OpenAI. Not saying it's not anymore, but this narrative's changing a little bit. Want to shift gears a little bit, turning to Apple. Apple shares actually lower after their big iPhone event yesterday. Everybody here on the desk owns Apple. Jim Lebenthal, I'm going to come over to you. What did you make of the event? Are you going to rush out and buy an iPhone 17?
I think this is a question of degree. I'll answer your question, no, but I probably should. And I think the answer actually informs what to do or what's maybe ailing Apple. Does it move the needle, what happened yesterday? Sure, a little bit thinner and, better cameras, whatever. I mean, it moves the needle a little bit, but it doesn't move it a lot. I own Apple. I'm not going to sell it. I think it can be a market performer, i.e. move with the S&P 500 over the next 12 months. But do I think it's going to do something like an Oracle's doing today? I really don't. Not anytime soon. Maybe that's an unfair comparison. My point being, just to kind of sum it up, to me, it's a little bit pricey, but it's going to benefit from passive investing and the weight that it has in so many important ETFs. So people are going to be buying it whether they know it or not when they buy passive ETFs. But I'm not that surprised that it's down today, Frank. It just wasn't that thrilling. Am I going to get kicked out for that?
No, but it reminds me, and Jimmy, you and I are old enough to remember the commercial. If you go back to the 80s, the Wendy's commercial, where's the beef?
Sure.
Okay, where's the AI?
I like that.
But where's the AI?
I like that.
And really, that's what everyone is waiting for with Apple. Now, I did make the purchases when Tim Cook visited the White House. I felt as though that was a moment that could incite and introduce a lot of buying from people that were sitting on the sidelines, and that kind of worked. You got from the 205 area, upper 235, 240-ish level. The stock is pulling back now, and it's pulling back because, yes, you have new products, but where's the beef? They want the AI, and I think the street didn't deliver that.
I got to say, if I had an iPhone 17 in my hand right now, would you even know? I mean, would you really know? That's the kind of thing I think about when I'm talking. And I'm not knocking Apple because, of course, it has some new features. And the AirPods sound interesting with live translation. But go ahead, Jason. I cut you off.
Yeah, no, so I was going to say AirPod translation, that's cool. The new hardware shift, I think we haven't seen that in a little while, the thinner phone. But to Joe's point, no real shift in AI, right? So this 17 is not going to be the story. I think folks are looking towards 18 potentially, as now we see some real AI developments.
And to put it really succinctly, no, I'm not going out to get a new iPhone, but I'm certainly not going out to get an Android either. It's not like there's some critical loss here.
Right. So, quick question. I know this is an unpopular topic, at least on this desk. Valuation at 29 times forward earnings. I'm not sure this is going to be a super cycle when we're talking about this. It might be a cycle, but it doesn't feel very super, Joe Terranova. I mean, any questions about the valuation of this company and the idea that hardware is about 51% of the business, and nobody's really amazed by this new phone?
So, listen, we've talked at length on this show, and I know Scott talked about valuation as being a North Star and determining whether you want to get in or out of a particular name. Historically, yes, Apple is at the upper end of its valuation. And then the question you ask yourself along with that, and again, I have a personal position in Apple. It's at half size now. But there is a degree of skepticism that along with that high valuation, they're not delivering you the growth. They're not delivering you the growth that they have delivered in years prior, and they don't seem to have the clear direction in terms of when they will stimulate that growth once again. Now, why the pushback on that would be, well, then why do you own it? And the reason that you own it, and credit Jim Cramer with this, you own it, you don't trade it. But this company is such a powerful force in terms of its ability on the downside to step in, use its capital to buffer any significant decline. So I don't look at Apple from the standpoint of, okay, I want to take a natural short position on it. I have a modest position on it, but I don't think you have extreme excitement relative to where the other technology growth names are.
Snipe, Jim, any questions about valuation in this company? I mean, all three of us, all four of us, seem like we're questioning the sales cycle that's coming up, whether it's super or just regular, whatever the case may be. Jason.
Now, what I will say, and I don't want this to be missed, is they did have a really strong quarter this past quarter, right? Revenue growth was up 10%, EPS growth was up 12%, services were up 13%, and China, which was concerns, obviously, about China with geopolitical tariff news, China was up 4%. Now, there's an $800 million tariff hit, and they're guiding for a $1.1 billion tariff hit this next quarter. But their earnings report was solid, and I think that's notable and to share.
I mean, I guess we got to shift to the broader markets. I mean, after this, AI trade's been confirmed. We know the weighting of a lot of these mega cap tech names on the markets, on the major indices. In your mind, we're seeing some price target increases, by the way. Deutsche Bank raising their price target for the year. Joe, is this basically the green light for this secular bull market to just keep powering through, at least through the end of the year? Because we're more than likely going to get some rate cuts in September, maybe the first of many, but more than likely September. Going through year end, are you feeling pretty good?
I think the calendar is the friend to the market. I think the calendar works in the favor of the market, where you get potentially the chase for performance. If in fact you could get broadening out, if in fact small caps can do what they have been doing in the last several weeks, they are under-owned. If you see a rebuilding of positioning, that's going to benefit as well. I also think, while the calendar might be your friend towards the end of the year, I think the calendar, as you move into 26, could be your enemy. Because I think you begin to run out of a lot of the catalysts that you found in 2025. And let's remember, you also have a midterm election year. And markets generally do not like the lead up into a midterm election. So I think those are two competing thoughts to kind of keep in your mind, where, yeah, things might look good into the end of the year, but how am I going to think about, as we navigate the calendar turn into 26, what could be a little bit more of a volatile environment and maybe have some corrective behavior?
You know, to your point, JP Morgan, Dubravko Lakos and his team coming out with title, some caution warranted, with 6 rate cuts currently priced in by the end of 2026, as you mentioned. Turning the calendar page could be a different story. We believe risky assets may be vulnerable at a time when tariff-reduced inflation is starting to flare up, possibly restraining the Fed's forward easing path. Snipe, I want to come over to you. Should you be a little bit careful going forward? I mean, the idea that so many of these cuts are baked in, again, we're pretty sure we're getting September, but after that, a lot of questions.
Yeah, no, I think absolutely it's time to be a bit concerned, to Joe's point on kind of the calendar. The cut is obviously baked in. We're in a zone where we're starting the cutting cycle, clearly, with PPI numbers that we saw today. We'll see CPI tomorrow, which is some soft numbers this morning. And then obviously labor has been soft as well. So I think, you know what that cycle is going to be. I think for me, as we look to the decision next week, which I think the market obviously knows what we're going to do, it's going to be about the commentary. How we heard in Jackson Hole how dovish the market, it kind of took a lot of that discussion. Let's see what it looks like next week.
Yeah, and on that note, I wouldn't be surprised if you got 25 basis points next week and the market sold off a little bit.
Right.
I mean, the market is now, if you look at Fed funds futures, it's expecting 3 rate cuts by year end. There might be some room for disappointment there, and even if there's no room for disappointment, what if you just get the 3 rate cuts and they're already priced in? I think you said that a second ago. You know, before Oracle's move today, the market was not exactly cheap. It hadn't exactly been, sitting down. So there was a lot priced in.
Keep in mind, S&P and NASDAQ pretty much are, actually at records right now, I should say. One other thought really quick, Barclays upgrading high volatility to positive, downgrades quality to negative. Joe Terranova, your thoughts on that? Don't hear that very often, downgrading quality to negative.
Well, they're a little bit late on that story. I mean, look at the tape today. Quality is actually significantly underperforming. In fact, I believe quality represented by some of the major ETFs is lower on the day, as is the S&P equal weight. So the story today, can we grab a chart of Emptum, the momentum ETF? That's having a really strong day. I think it's up somewhere around 2+% on the day. So I understand, there you go, 2.46%. I understand why a lot of the analysts are recognizing what we all see already in the marketplace, which is momentum, high beta, high volatility. That's the story of 2025. Listen, you don't have to like that. And when you are managing money, one of the things that you have to come to grips with, and it's taken me a long time to understand this, is this: every year you're not going to be participating in one of the favored strategies. Whatever your strategy might be, there's going to be periods where your strategy is just not in favor. Yeah. If I think about what I have presented to the market with the ETF and the quality momentum strategy, I go back and I look at 23. That was a punitive period for me. Felt awful. I'm equally weighted, and you have 7 stocks driving the significant outperformance. So look, in 25, if you're a value investor, if you're rolling up your sleeves and you're doing the analysis, you know what? Kudos to you. I still believe that stuff works. But right now, a premium is being paid in 2025 for looking at stocks that are going from the lower left to the upper right, and where there's skepticism and where there's underweight positioning and the opportunity to rebuild positioning.
Joe, to a certain extent, there's overlap between the two categories that you just spoke about. You know, the stocks that have, I'll call them value stocks, right? I mean, I remember 2023 into 2024, it was kind of painful, frankly, for a guy like me who's doing the analysis and saying, why aren't these stocks moving? So, you know, and now they have momentum with them. I mean, they're not today. Obviously, Oracle is sucking out a lot of the oxygen from anything else in the room, but there's overlap between the two categories that you're saying. Actually doing the analysis this year is paying off.
Always think, where can the market rebuild positioning? And if we look across the equity size classes, without question, the biggest opportunity to rebuild positioning is in small caps. They now have to prove themselves over the coming quarter, both in terms of performance, but also in terms of earnings growth.
You know, it's funny you say that. We got to go after this, but B of A says they see more inflows into small caps. They say a lot of the inflows this year have been into single stocks. They see the potential for more to go into ETFs. I mean, right now, the IWM, is that something you would buy, Joe? Just kind of go down the line. Is that something you'd see a lot of opportunity in, with the idea that maybe we're in a rate cutting cycle, but at least one rate cut?
I will say I am far less skeptical about their ability to sustain a recovery than I was 6 months ago. I think that over the last 60 to 90 days, less skeptical.
Oh, less, okay.
Over the last 60 to 90 days, I think they are proving that there is the potential for an end-of-year run-up in small caps. And I think biotech is one industry that you really want to look at in terms of rebuilding positioning quickly. The other would be regional banks. I think regional banks are ahead of biotech in terms of the positioning rebuild.
All right, really quick, Snipe, Jim.
I'm not going to do the ETF. I'm sorry, do you want to go ahead?
No, I was just going to say, clearly, I mean, the rate cutting cycle is a catalyst for the small cap name. So I think definitely there could be some run up into the year. Right. No doubt about it.
I'm not going to do the ETF. I like particular stocks. I did IJR, the S&P 600, earlier this year, and it just, you know, it's too many macroeconomic forces. I want company-specific names.
Jim, we got to leave it there. Oracle share still up 40%, believe it or not. Coming up next on Halftime. Welcome back to the half. Morgan Stanley out with its vintage values list compiled of mid to large cap companies it says can deliver superior risk-adjusted returns over the next 12 months. We're taking a look at some of the non-mega cap names. Jason, you're one of the names you own on this list. I'm thinking about Eaton right here. Yep. You're actually talking about this earlier as a second-level AI play. Your thoughts?
Yeah, I mean, they're kind of playing in that sandbox of all the mega trends. Obviously, power, data center build out. The stock is up 4% today. You know, up 9% year to date. Operation margins continue to expand. I like this play in all the AI stories we've been talking about.
Jimmy, is this a value list in your mind? Are these value stocks?
No, it's not. I'm trying to figure out what to make of this. I mean, maybe I'm Rip Van Winkle, but I remember when value was certainly a lot less expensive than, you know, Palo Alto Networks or S&P Global. I don't want to look. They're trying. I get it, but also just a 12-month holding period doesn't exactly qualify you as the longest of long-term investors. Good names here. I'm not taking shots at the names. It's just like this is neither vintage nor value.
To play off Joe's comments, where's the value? All right, stay with us. Final trades coming up on Halftime. We'll be right back. We want to move on to final trades. Jim Lebenthal, you're up first.
CRH. This is not well known. This is the B side of a 45, if you will. Basically, it's an aggregates company, materials. They make cement, gravel, that sort of stuff. It's bigger than its well-known competitors, Vulcan and Martin Marietta, but it's cheaper, and I think it's got more room to run.
Yeah, their investor day coming up in about 2 weeks as well.
I'll be there.
Jason Snipe, you're up next.
A lot of excitement around the cloud infrastructure play. I like Microsoft here. It's down about 5% in the last month, 39% Azure growth. I like this name.
Joe Terranova.
Remember, these are trades back in early August. I gave you the refiner trade, Valero, Phillips, and Marathon. We're going to take profit on half on the close today.
All right, still waiting for Klarna to trade right now at 52 to 53, originally priced at 40. The exchange is going to be all over it. That does it for halftime.
Hey everybody, welcome to Blue Cloud Trading. I'm George. It's Wednesday. It's September 10th, 6:37 p.m. And in this video, we're going to take a look at the markets. We're going to look at the stocks that they talked about on the halftime report earlier today. Here's a list that I wrote down here. It's about 12. I didn't cover all of them. I did highlight some of the strongest ones that we're going to go into. We're going to look at the index ETFs. We're going to look at some of the Mag 7 stocks like Tesla, Apple, Meta, Nvidia. We're going to look at some of the strongest sectors. And we've got 3 member requests today that we're going to look at. Okay, so let's get started first by taking a look at the index ETF. I'm sorry, just the indices here. The Dow was down 0.48%. So you can see here in the morning it dropped around 11 a.m. It didn't stabilize. It pretty much stabilized. NASDAQ basically gapped up and then dropped and then finally closed up just 0.03%. All right, S&P 500 basically gapped up and dropped up 0.30% though. So it did stay above the prior day's closing price. And the Russell 2000 started up in the morning and then dropped down 0.18%. These are not big moves here in the market. And the reason for that is if we take a look at the news here, you know, what they're expecting is the CPI inflation report. Okay, so that's the key thing that's coming out tomorrow. And so it's coming out tomorrow at 8:30. Be closely watched for signs of how much President Trump's tariffs are impacting consumer costs. So far, the impact has been limited, reinforcing expectations that the Federal Reserve could kick off its easing cycle as soon as next week. So that's going to be interesting to see how everything basically materializes here with that. But let's look again at the. Whoops, hold on. Sorry. Let's get back to this, and we're going to look at the heat map real quick. So, Oracle, by the way, how about Oracle today? Up 35.95%. Huge move. It was a huge move, folks. Believe me. It really was. It was up 35.95%. Palantir was up 2.7%. Nvidia was up 3.85%. Broadcom up 9.77%, almost 10% today. And it up 6.21%. Energy stocks did really well today. Industrials did pretty well. But companies like Apple, Amazon, Meta, the medical device companies like Abbott were down. Some software applications like CRM now, Intuit, Uber, CDNS, IBM, Accenture, they were down. Eli Lilly was up. Let's look at the sectors. How are they looking for today? So here's the one-day performance. Technology up the most, 1.91. Energy, utilities following that. And then consumer cyclical, healthcare, and consumer defensives were down the most today. There's always these changes taking place. But my utility stocks, I do have some stocks in my portfolio, pretty much in every sector. And the utility stocks did really well today. So that's good. My energy stocks did as well. And so did my technology stocks, obviously. That's in the Blue Cloud portfolio, of course, which I share with members. And guys, if you do want to become a member, just remember, really easy. Just come to my Blue Cloud trading page here. At the very, very top, there's a link. You click on this link right here. That will allow you to join. And what you'll see is a pop-up here. Join this channel. It's different than just subscribing. Subscribing is really beneficial because it helps to get the word out. And but this is if you want to get additional content to what I do here daily. You can access those member-only videos. Let me just scroll down a little bit. Hold on. I'm going to scroll down first. These are the member-only videos here. I put one out every weekend, and usually it's around an hour long, okay? And I go over my entire portfolio. There's many stocks. And then I also give 20 new stock ideas every weekend. And many times I'm adding stocks into the portfolio from that 20 stock watch list. All right. Now I also have a proprietary scanner that looks for stocks that are basically, these are more pullback strategy type versus breakouts on the scanner, right? So the stocks that have pulled back but are breaking above the Tenkan-sen, for example, and those are also shared. And those are shared each day, right? So how do you get access to those? Now, again, click on that link right there. And then once you pop this up, now you can become a Blue Cloud supporter and you can request a stock to be analyzed on the show under this. All right. Under Blue Cloud Trader level, that's the next level up. This is where you'll start getting those access to those exclusive member-only videos. Okay? And then if you want to get daily updates on my trades, you become a Blue Cloud Legend level member. All right, you can request up to 3 stocks or ETFs be analyzed. You'll have access to some day trading videos. I do plan on making another new day trading video soon. You'll have my daily trade updates. So if I add a new position or close a new position during the day, Monday through Friday, I'm posting those before the market closes. And I share that with the Legend level members. And then I summarize it all at the end of the week with the Blue Cloud traders. Okay, so let's get back, folks. Let's get back to what we're talking about here. So we're going to look now at, we're going to start off with the S&P 500. And what we're using here is Ichimoku. Ichimoku, you say? What is that? It's a Japanese indicator. It's really, it looks complex. It looks a little bit complicated, but it really isn't. It's actually quite, it's unique, that's for sure. It was incepted in the late 1930s in Japan, and it was published in the late 1960s, what you see right here. And then it became very popular in the 80s here in the United States, and a lot of financial institutions use it. And I always like to bring up that even Fundstrat, Tom Lee's head of technical analysis, uses this this indicator. Why is it utilized by financial institutions? Well, because it's a rules-based system. So if you're unsure about, okay, what, you take that off and you just got price, you can be, it can give you some false signals, but this particular indicator, what it's essentially telling us is, where is price today? Those Japanese candlesticks in relation to the moving averages, the midpoint of the last 9 periods. The red line is the Kijinsen, so that's the Tenkan-sen, that's the Kijinsen. The 26 period is the midpoint of the last 26 periods, plotted right there. Right? We want to be above both of those 2 moving averages. We've got the Chiku span right there, the white line that you see. That's the closing price today, projected 26 periods ago in a line form. Okay? And so that's useful because we want to know, where is that line in relation to the candle 26 periods ago. If it's above it, like it is here, right, above that candle, that's very bullish. The other thing that we're looking for is for the cloud, right? We're looking at the cloud. This is the interesting aspect, the visual aspect. And Ichimoku stands for at a glance. So at a glance, you can quickly see that, yeah, we're above the moving averages. We're above the Ichimoku cloud. This is where you want to be. The Senko span A is derived by taking the midpoint of these 2 moving averages here and projecting that 26 periods into the future. And then the purple line, which is also projected in the future, is actually taking the midpoint, basically the high and the low of each candle, divided by 2, okay, for the last 52 periods, and projecting that into the future instead of below it, like the Tenkan-sen and the Kijinsen. Very unique indicator. All right. I've also superimposed the 200-day moving average here, and below you'll also notice the directional movement index. We've got the positive. I've got it at a different setting than the traditional setting. I got it at a setting of 9. And I also superimposed the ADX, which represents the momentum. So if the white line is moving up, that's bullish when the green line is above the red line. If, however, the red line happens to be, okay, above the green line, like back here, okay, and the white line is moving up like you see right there, that's actually bearish. And you can see how that momentum increased to the downside instead. So right now this is looking really bullish here for the S&P 500. In fact, if we look a little closer, let's zoom in a little on this. I do believe, let me just check it, right around there. Has it gotten above that high? Not really, not yet. What I'm looking at is this candle right here. Okay, has not, let's see, what is the high of that candle? The high is 652.21. We're right at 652.21. So isn't that fascinating? Like, we basically closed at the same level as the high. So we have not broken above that box basically yet, but it's looking more and more bullish. I think tomorrow might be yeah, of course, remember we have to wait until that CPI, right? CPI report regarding inflation. I mean, that could have a very negative impact on the markets. So that's why tomorrow is going to be a really important one. The QQQ ETF also moved up, but then towards the end of the day gave away some of that, right? And here we can see that on a 5-minute chart, where here we are on the 10th, September 10th, gapping up and then basically giving away a lot of that throughout the day. What about the Dow Jones? Dow Jones, steady pretty much, right? Just kind of like moving sideways still, waiting for that information. And then once we break through that box, I think again, it has to break above, right? It has to close above. And then we'll see an expansion, okay, generally. That's the more likely outcome if we get good news. Russell 2000 has pulled back, finding support again at the Tenkan-sen. Very important support level. Down 0.18%, but still holding up. And the VIX, a little bit of fear here. Up 2.06% today, but still at that around the 15 level, which is a very neutral level that's conducive to it's just basically sideways action like we're seeing right now. It's neither bullish nor bearish. It's just steady, okay? And then FEZ, which is the Eurostoxx 50 ETF. This one here, we had a negative crossover yesterday, as I mentioned, right? Tenkan-sen had crossed under the Kijun-sen. Therefore, I had not put a blue flag on there, right, for FEZ. And today it's down 0.52%. It's actually down the most out of these ETFs, but holding up above both moving averages. All right, now we're going to look at the stocks they talked about on the halftime report earlier today. And so let's take a look at those. And I basically already reviewed these. I've highlighted the ones that are the strongest. There's basically just 5 out of the 12 that I think look the strongest, like Broadcom, for example. AVGO is the ticker symbol. Today had a really big move, up 9.77%. It broke through that 317.35 level back here, that was from August 13th. It broke on Friday last week, but then dropped, and it was just kind of getting squeezed in this little, I guess you can call it a pennant type pattern, and today broke above. Okay, so now, and it happened on high volume over here. So that's good. I think Broadcom's got more potential. IBB is stuck inside this little range here between the 142 and 139 level, but it's holding up above Tenkan-sen. That's the biotech index. So overall, I do still like that one. MTUM had a big day today, up 2.39%. This one, interestingly enough, Oracle obviously helped to push this one up because Oracle is within this ETF, right? It broke that box right there. Let me just get that perfect. Okay, so you can see it gapped above that. Remember what I said earlier about what we're looking for? What we're looking for down here is the green line to be moving straight up like it is there. Red line dropping. ADX moving up. Volume higher than the 50-day moving average here that I've superimposed. So we want it to be higher than the prior day, which it is. So I like what I'm seeing with MTUM. What about Oracle? Today, 30 up, 35.95%. So big gap up, right? And but then it created this like long wick at the top. What does that mean? Well, that represents selling that started taking place and profit taking. Because imagine you had a position of Oracle in your portfolio, right? And you see it jump that much. I mean, it would make sense 100% to take profits at that level. As you can see, if we switch it to a 5-minute chart, let's do that. This is the gap up, okay, the big move up. It continued to move up another 8.7%, and then look what happened, right? And by the way, guys, this is what I'm talking about as far as you can use this indicator on shorter time frames like the 5-minute, the 1-minute. Once it got under the 9-period moving average, that was the beginning of the end of the move up, right? Because you can see here what happened. It basically started to steadily decline. So it dropped. Okay, you can see that little downward channel. So what does this mean for the stock? Well, I mean, it's so far ahead of itself. It's hard to tell what's going to happen here. Now, at this point, you've got a support level, which is the low of this candle. And then this is the level that I think it needs to break above. It might stay in this range because it is a pretty big range here that we're talking about. So it might stay in this range for a little while. All right. It might start moving sideways. Hard to tell. We'll see what happens tomorrow, obviously. PANW, that's Palo Alto Networks. That's also looking pretty good because I did give it a blue flag, even though we got a shooting star type candle, long wick. Again, same situation. It gapped up in the, it moved up quite a bit. Actually, it didn't gap up. It just kind of moved up in the first 15 minutes or so. You can see that right there. And then it started to drop, and it dropped about 3.4%. So it gave away all of that. Now on so that's the daily chart. Okay, we can see that the cloud itself is also becoming bullish. We want that Senko span A, which is the light colored blue line, to be above the purple line, and that just happened. So that's good. And the Chico span is still above the price. So it's all looking pretty good. The only problem here from a technical perspective, if you're looking at this daily chart, is that we have not taken out this high. We broke this low and we created a lower low. And right now, as far as I'm concerned, we've got a lower high and a lower low. So we're technically, not at that stage where this is an ultra bullish chart. Okay. But it's in the beginning stages is what I'm suggesting. Now, the rest of these are not that great, so we don't really need to spend too much time on them. I'm just going to explain to you why. Here's CRH. This one here, actually, if you look at the weekly chart, it's not terrible because it is looking still bullish. But if we look at the daily chart, today it actually did close under. Let's see, did it close under one? Yes. So it closed at $111.26. The Tenkan-sen is literally 2 pennies above it. So it's under the 9 period, just by 2 pennies. Not terrible, not a terrible situation, but it's certainly not looking ultra bullish here. You can kind of see there's, it's kind of turning over a little bit. See that decline right there? So, yeah, it's almost like building a descending triangle, and that's a pattern I don't like. So maybe if it can break above that little trend line there, then we'll see the continuation to the upside. What about Cisco? Well, as you can see, Cisco Tenkan-sen is under Kijun-sen. The faster moving average is under the slower one. That's not good. But price is breaking above the cloud and on slightly higher volume. But there's no momentum here. Look at the ADX still dropping or moving sideways. So I don't like it that much, obviously. And if we look at the weekly chart, what does that look like? It's under the Tenkan-sen. So no. Eaton Corporation under the 9 period, no on that one on the weekly, and on the daily chart inside the cloud, so no. IJR under the Tenkan-sen for a couple of days now, so no on that one. That's the small cap 600. KRE is under for like 4 days now, under the 9 period moving average. That's the regional banking ETF. I'd hold off on that one too. Palantir, PLTR ticker symbol, moved up a little bit today. It was up 2.7%, but once again, we had a negative crossover take place here. The faster moving average crossed under the slower one. So I'd hold off on this one too. SPGI, same situation. We had a negative crossover. Tenkan-sen under the Kijun-sen, no on that one. Finding support though, right there. A couple of these last 3 days above the Ichimoku cloud. Very strong level of support. Okay, let's keep going. These are some of the Mag 7 stocks. Tesla, up 0.24%. It does look bullish mostly on the daily chart. As you can see, price has been up. I don't like this candle, but it is above the moving averages. But if you look at the weekly chart, like I mentioned yesterday, the Senko span A is still under the Senko span B. That's bearish. And you can see the ADX is still moving down on the weekly chart. Apple, on the weekly chart, you can see last week on Friday, September 5th, it broke above, and then this week it just came right back in. And I was talking about how it's not a good idea to add a position, when you see that cloud is still bearish, because it's not necessarily a real move. The other thing that you can also utilize for evidence is the Chico span. Like I said, if it's under the price as it was here, in this case, right? That's bearish. All right. How about Meta? Now, Meta on the weekly chart, doesn't look bad because last week it actually broke and closed above Tenkan-sen. It looks like it might hold up above that level this week as well. But I haven't given it a bullish blue flag yet because on the daily chart, we had a negative crossover right there. And that hasn't been, materialized in something positive. The Chiku span today dropped under the candle. So you can see that right there too. So it was down 1.79%. How about NVIDIA? NVIDIA popped a little bit today. So on the daily chart, it looks really good. I like what I'm seeing here. High volume. The directional movement index is not quite there yet. You can see that yes, the positive DI is moving up and the negative DI is moving down. That's good. The ADX is also dropping after that momentum to the downside. So that's actually positive. So when you see the red line, okay, above the green line and the ADX is dropping after a move up, that's positive actually, because the negative momentum to the downside is now starting to come out. And so there's potential here with this big gap up 3.85%. Now, the reason I didn't give it a blue flag, though, is because the Tenkan-sen and the Kijun-sen are at the exact same level. It's not a terrible... the other thing that I also noticed is that the Chiku span here, whoops, right there, the white line is inside the candle still. So it's getting closer and closer to looking more and more bullish, but right now it would hold off. It's also going to probably run into some resistance around these levels here. Let's find out what the highest level is. The high there is 184.47, 184.48. Yeah, so 184.48 is the level that it needs to break above. So let me put that in there. Okay, so that's where it's going to find resistance most likely. That's another 3.8% away from where we currently are. And here's the weekly chart. So, NVIDIA is starting to look a little more bullish in the weekly chart too. I do like that. Some potential. Now, let's keep going. These are the strongest sectors today. Gold, GLD, up 0.36% above the moving averages. An interesting thing that happened with gold today, it lost a little bit of its momentum to the upside. You can see that here with the ADX flattening out and the positive DI moving down and the negative DI moving up. That's not a good sign. And you can see it. What caused it is this decline that happened. It dropped throughout the day, right? It dropped, came really right almost at the Tenkan-sen. And then what happened was basically price started to move up and it closed up for the day, right? And essentially it closed higher than the prior day's closing price. So that's why it was up 0.36%. And here we've got silver, SLV is the ticker symbol. You can see that it was up 0.62% today. It basically created what's called a bullish harami pattern. If we zoom in on that, a small little candle after a larger red candle. Let me show you guys that on the candlestick pattern reference sheet. Let me make this a little bigger. There we go. And this is what it looks like right here. Large red candle followed by a smaller bullish candle. There it is. And it doesn't look exactly the same as that picture, but that's essentially what we're looking for. That looks good. I think this has more potential to the upside. GDXJ also looking great. Moving up. Okay. It gapped up in the morning and then continued to close above the prior day's closing price. It was up to the most 2.91% out of the bunch here. XLK technology. Interesting thing that happened here is with technology, it gapped up and did it close above? It's at 270.15. It closed barely, like 10 cents above the high from August 13th. So all-time highs here for technology. This particular ETF, the XLK, up 1.81%. I'm sure that Oracle had something to do with that move, obviously, because it's within this ETF. I'm pretty sure. Let's see if we can find it in here. It's got to be in there. There it is. There's a little Oracle. So, yeah. Tomorrow's going to be an interesting day. We'll see what happens with that. Like I said, with that not earnings, but the CPI inflation report. COPX, Copper Miners ETF, another bullish harami, up 0.70%. So I like that one. GDX is very strong uptrend here, up 2.47. XLC Communication Services looks great still, up 0.74%. Remember, I've already checked the weekly charts on all of these, and they all look great. Okay, here's a weekly chart so you can see what it looks like. Here's SMH on the weekly and on the daily. The Tenkan-sen is crossing over the Kijun-sen right there, so that's looking more bullish. ADX is moving up. Volume is increasing. Positive DI is above negative DI. How about granny shots? Remember we talked about granny shots yesterday. Actually, I was talking about this box that, the Tom Lee's ETF has been stuck in since July 14th in this range. Look what happened today. Gapped up. Again, Oracle probably had something to do with that. So that's a big move. I think it's got potential. I just don't like this candlestick that formed. It almost reminds me a little bit of a gravestone doji, or spinning top. So it's not like an ultra bullish candle, but I do like the fact that the volume was higher here. The positive DI is moving up, negative DI is moving down, and the ADX is moving up. All right, now the rest of these are not that strong. Like there's ET. I'll just run through them real quick and then just show you the chart. ETH is inside between the moving averages. No. Oil K, that's the free K1 free crude oil strategy ETF. That's under the cloud. No. IBIT, Bitcoin is inside the cloud, but up 2.07. Materials is in between the moving averages. Real estate's in the cloud. No on consumer discretionary as it dropped under the Tenkan-sen today, up down 1.20. Utilities inside the cloud. XLV under the Tenkan-sen. XLP under the cloud. Industrials under the Kijun-sen. XLF under the Tenkan-sen. Energy popped on the daily. Looks good on the daily, okay? All right, but on the weekly, XLE is still under the cloud. All right, doesn't mean that some stocks aren't extremely bullish in any of these sectors that I'm mentioning here, but these particular ETFs, I wouldn't be adding a new position in them. XHB looks good on the weekly chart, right? But if you look at the daily, it just 2 days in a row now it's under the Tenkan-sen. It could easily pop again. IJJ is also 2 days under the Tenkan-sen. On the weekly chart, it's above. That's the 400 value ETF. All right, now we're going to look at the 3 stocks from our members. We'll start off with Upstart Holdings. Here it is on the weekly chart. It is under the 9-period moving averages and inside the cloud. All right, so, the profit margin is negative, operating cash flow is negative. Next earnings are on November 6th. It's holding up above the Kijun-sen and the bottom part of the cloud. So it's got some support right there from the weekly. On the daily chart, it broke through the cloud today, down 9.43% on high volume. And as you can see, the ADX started moving up. Now, again, it stalled though at that 200. See that dotted yellow line, the 200-day moving average. So let's find out exactly what that level is. If we look to the left under average 200, that little box that pops up over here, you'll notice that the 200-day moving average is at $62.34. And the closing price was at $62.42. So the price closed above the 200. So that's good. It's also above that 60.54, which is based on that low right there. So is there some potential that this thing bounces and off these levels? Absolutely. But it's not looking super bullish here. I obviously would not be adding a new position here, but this is more a situation where you might want to try to manage this trade at this point, and decide whether you want to hold on and how long. And if it starts breaking through some levels here, what level are you going to utilize as your last resort support level? TGEN dropping now for multiple weeks here. On the weekly chart, it's under both the moving averages. Now, here's the thing. Also, a company with no profit margins yet, negative 16.14. The opening price bat was at $3.17, and if you had, gotten into this stock, you'd be up 126.21%. Now it looks like this week we're getting a bullish candle. This is a good sign. If we look at the daily chart, it was up 8.14%. and re-entered the Ichimoku cloud. But again, based on the technicals here, I wouldn't be adding a new position. If you're thinking about adding to this, this is not the time to do it. So it's all about managing this trade basically also. And then we've got Snowflake. Here it is on the weekly chart. Okay, another company that also with negative profit margins is above the, on the weekly charts, above the Tenkan Kijun, and it's above the cloud. I like the technicals here overall. Looks good on the weekly. On the daily chart, also pretty bullish for the most part, except for the fact that today price got under the Tenkan. But what's interesting is the fact that the Tenkan, the green line moved up. So if the green line was still flat, it would still be above it, but it actually moved up. So I think that's actually quite bullish. The other thing I noticed also is how there's a little spike up in the Senkou span A. Do you see that right there? Where it was flat, it actually moved up a little bit. That's telling us that there's a higher probability, okay, that Snowflake will move up tomorrow based on that, I think. And remember, even though this is a negative candle, the stock was in fact up 0.13%. What happened was it gapped up in the morning and then just got sold a little bit, but never below the prior day's closing price. So that's the good news. And overall, you know, the ADX is flat here, but positive DI is moving up, negative DI is moving down. Very low volume here. Nothing really happening with Snowflake today. And that's going to do it for this video, guys. Thanks for watching. If you haven't subscribed to the channel, really easy to do that. It's free to subscribe. Just hit the subscribe button, hit the notification bell. Okay. And then again, if you want to get that extra content that I do, hit the join button for that to become a member. All right. And then one more thing I was going to mention also, if you like the software that I use, this TC2000 software, you can find a link for that and get a $25 coupon. So from the same page here, right next to that link, you'll see this. It says, and 8 more links. And if you click on that, learn a little bit about my channel, scroll down, and there's the link for the $25 coupon. There's a new link here for wise.com if you want to be able to send money to people overseas. George has given you a fee-free transfer of up to $600 US. You got to be kidding me. That's crazy. You can always transfer more, but we'll waive the fee on the first $600 US. You enter your email, you get your gift. And millions of happy customers. This company's been around for a long time. They also have a business. I use it. I use it because I do travel to Europe. I've got both a personal and business. Okay, so this is great. It's got some great features. Multi-currency account. Here are the features. Let me look into that a little bit. Let's show you guys a little bit about wise.com. Whoops. Our pricing. It's very low cost for sending money overseas. It's a really good global transfers with great rates guaranteed. Receive money, get paid from abroad, convert money, exchange currencies quickly without hidden fees. That's the best part. They don't charge a lot for converting from US dollars to euros to any currency, pretty much most currencies. Use the Wise debit card. You can also get a credit card, fair exchange rates. They go with the mid-market rate. The one you can check on Google. It says here, convert more, save more. So something to think about. All right. And they keep the money. You can also, the money is, oh man, I'm trying to remember. Hold on. Maybe there's some information here about that. Registering with Wise is free. Sending money from 0.33%. Spending with your card. Withdrawing 200, it says here, GBP per month per account is free. You know, if you're traveling overseas and you need like to be able to use the ATMs there, you know, you can use it anywhere, and most ATMs will accept this, obviously. Let's see what else does it say. Pay with a Wise card. You can get a credit card. Spend funds in your account in the same currency online, in store, and abroad safely. Holding money in your account. This is the part that I was talking about. Yeah, so you can also hold money in there like you would in a checking account or savings account. Let's see. Receiving money. There's a lot of stuff here. Anyway, you get the gist of it. You can look into it a little bit more. Thanks for watching, guys. Appreciate all of you. Don't forget to like, subscribe, and I'll catch you all in the next video.